Hi folks, this is Hyman from the Currency Cross Trader, and I want to talk to you about Euro Yen and a long-term outlook on Euro Yen. So we're looking at the weekly 10-year chart and using a little technical analysis here with chart patterns and Elliott Wave counts. This was a wave 5, which was a completion of a long-term multi-year upward move. And then a very choppy market that gets slammed here in an ABC corrective move. So here's A, here's B, here's C, and C happens to form what technicians call a falling wedge, or what Elliotticians call an ending diagonal. And these typically form five major passes back and forth between the falling wedge or ending diagonal. And here's one, here's two, here's three, here's four, here's five. And five is in the process of being completed now, because as you can see here, here's one, two, three, four, five waves. And so we're in the fifth wave of that. So we're coming to the final innings of the decline in Euro Yen. Now, with that said, let me say here that, just this move from here to here, from 100 to 95, is a 500 pip move. So on a long-term chart, it looks very small, but just keep in mind, the final move could be big, because sometimes you do have some spikes lower of some hundreds of pips, and it could even sometimes overshoot the pattern, go outside of the pattern, and then come back. So just realize, if you choose to trade this pattern and trade this long term, what you would want to do, in my opinion, is to use micro lots, and to probably trade very small. In other words, like one micro lot per $1,000 that's in your account balance, something of that sort. Because here's how this normally happens. These normally have a big climax sell-off. They will go back up and have a huge rally, and then they'll be followed by another huge sell-off, which could either come back to where the top of this goes, or sometimes they've been known to go all the way back to where everything bottomed and started in the pattern, and then make their big launch higher. So it's a very volatile move, a very volatile bottoming process. It's a process that takes minimally months to possibly up to a year. So one thing that will likely happen is this will likely fall some more, and that's why you'd want to use micro lots if you entered anywhere around now, so that any pullbacks against you are not huge dollar wise. Then we'll see the pair come back up to the top of the falling wedge, which would likely be at that point somewhere around the 107, 108 level. By the time you get to the 109, 110 level, you've got the confirmed break, and that's when a lot more people are going to notice and recognize that this thing has actually turned around. That's when you're going to see a pretty big thrust forward, and that'll be the first move. And then this thing is going to usually turn around at some point, so you would typically want to be out of it once it starts to roll over, because you want to retain those gains. And then some form of huge pullback typically occurs after the falling wedge. Again, it could fall back to where the top of the falling wedge is, or it could sometimes fall back, in extreme cases, all the way to the very bottom of where it originally bottomed, and then start its big ascent higher. So once again, once you come out of it, you want to let it fall and see how it deals with the top part of the falling wedge. If it starts to bounce off of that, you might inch in again with micro lots, because and just realize, be mentally accepting the fact that it could fall back to where it began before heading higher again. But ultimately, there's a huge move coming, because there's at least a 2,800 pip rally coming from the point at which it breaks out here to where it reaches a minimum price target of 138 eventually, which is where the wedge pattern started. In other words, these traditionally go back to around the areas where the wedge started as a minimum. They can go much further than that. So the 135 to 138 area is definitely a good long-term target for this. But remember, this will go higher, then it will fall back, either to 107 to 110 area, or it could come all the way back down to 93, 95 area, whatever it ends up bottoming out at, which it could even be lower than we see here on the chart on the bottom. And then the long ascent will happen, and that long ascent, could take a year or two to reach that target. So this is definitely a long-term outlook, a long-term trade, but a ton of profit to be had here, because the 2,800 pips is figuring from 110 to the 138. But if you catch this thing a second time way down here at whatever 95 or 108 or something like that again, and hit it again, you can have far greater than that. So you can literally have thousands of pips, 3-4 thousands of pips made in this long-term trade. So just want to make you aware of this. Not a lot of people look at long-term charts and long-term formations, so they won't be aware of this big move coming. But I wanted to make those that watch my videos very much aware of what is to come and what will unfold in the months and even years ahead in Euro Yen. Thanks so much for watching, and bye-bye.